Welcome to this week's look at the state of the New York City real estate market. This is for the week of March 18th to the 24th. We're going to get started, as we always do, with the luxury market. Then we'll move on and take a look at the Manhattan market and the Brooklyn market. And then I'm going to move on and wrap it all up and give you my thoughts and my recommendations for buyers and sellers who are active in this market. This is a market that is changing a lot. It has changed a lot since last year. And so if you are an active buyer or seller, you're definitely going to want to stick around for that wrap up. We're going to get started now with the luxury market. There were 25 contracts signed for properties that were priced at $4 million and above. 5 of those were in the trophy category for properties that were priced at $10 million and above. 14 were condos, 4 were co-ops, and 7 were townhouses. 17 of those properties were uptown and 8 were downtown. It's interesting to note, last week, if you remember, we had 40 contracts signed in the luxury market. So this is 15 fewer than the previous week. Was last week an anomaly? Possibly, probably, maybe. We don't know. We're going to find out. But this week, we know we had 25, and that is still a very respectable number. The number 1 contract for last week was a townhouse at 109 Waverly Place. It was asking just under $20 million. It was reduced from just under $25 million when it was listed in August back in 2022. It is a 25-foot wide 4-story house. It has over 8,000 square feet. It includes 7 bedrooms, 6 bathrooms, 2 powder rooms, and an elevator, which is a helpful thing to have in a townhouse. And the basement has a lap pool, a sauna, a gym, and a wine cellar. The ground floor has a large kitchen that opens up onto beautiful garden. The number 2 contract was Penthouse A at 527 West 27th Street. It was asking just under $18 million. It was reduced from $21 million when it was listed off of floor plans back in June of 2016. This is a condo. It is a duplex. It has 4,552 square feet. It includes 4 bedrooms and 4.5 bathrooms. Upstairs, there is a almost 4,600 square foot terrace that features an outdoor kitchen and a 9 by 32 foot pool. Amenities in this 19-unit building, which is known as the Jardin, include doormen, on-site parking, a fitness center, yoga studios, 60-foot skylit pool, and a children's playroom. The stats for last week: the total weekly asking price sales volume, $206,945,000. Average asking price, $800,277,800. Median asking price, $6,950,000. Average discount from original ask to last asking price, 12%. Average days on the market, 584. That's it for the luxury market report for last week. If you have any questions, please post those below or reach out to me at Sotheby's. We're going to move on now and take a look at what happened in Manhattan and Brooklyn. Then I'm going to wrap it all up and give you my recommendations for buyers and sellers. The Manhattan market for last week saw 469 properties come on the market. That's a change of a little over 4%. Contracts signed up almost 19%, 283. That's a nice pop for the week. Off-market properties down almost 8%, 132. The monthly supply is also up 41%, 1,855. We really needed that uptick in supply. Good to see it. Contracts signed also up a little over 9%, 987. The off-market properties are also showing up 47%, 538. This market pulse, if we take a look at it, it seems to be trending downward. It had been moving up pretty steadily into that seller's market territory. We're kind of back into this a little more neutral territory. Looks like it could even be moving a little further down, but for right now, we seem to be in this balanced, neutral place. The liquidity pace chart showing this 30-day moving window of contract activity shows 987 contracts over the last 30 days, definitely moving upward, showing this neutral, balanced market. Again, when we're talking about the market conditions and we're looking at whether this is kind of a balanced, neutral market or a seller's market or a buyer's market, it really is based on supply and demand. This is a really interesting chart. It is a new chart. Happy to share it with you. This is going to be very interesting, I believe, to both buyers and sellers. If you're a seller, you want to be successful in this market and you're trying to figure out how to price your property, or you're a buyer and you are trying to figure out how to make offers that are going to fly and help you to be successful in this market. Because again, last year was last year. We know that the market was really tipping in the favor of the buyers. So buyers were taking full advantage of that, those who were in the market. This is not really the case now. But I think as buyers and sellers are adjusting to this new normal of a more balanced, neutral market, they're kind of figuring out where they are and how to kind of have a meeting of the minds. So this chart, I think, will be helpful. Looking at listing discounts and off-market listings, it appears that units that are asking 16% above the median price for similar units may have a much, much harder time finding a buyer. I'll get into that more when I give my recommendations for sellers in terms of setting that all-important asking price. But for now, I think this chart is kind of telling the story. If you overprice sellers, you are very unlikely to be quick to find a buyer, and you're going to sit on the market. And we all know at this point what sitting on the market does to your bottom line. It does bad things, so try not to do that. Okay, that's it for Manhattan. Any questions, please post them below. Reach out to me directly as Sotheby's. Happy to answer your questions. We're going to move on now. We're going to take a look at Brooklyn. And then, as promised, I'm going to wrap it all up, give you my thoughts and my recommendations. The Brooklyn supply for the week last week dropped 9.2%. 207 properties came on the market. So Brooklyn is lagging a bit compared to Manhattan. Definitely need to see more inventory coming on the market, but we didn't see it last week. Contracts signed up almost 19%. That was a good sign. 158 contracts signed. Off-market properties down almost 7%. If we take a look at that monthly chart for supply, 883 up 27, a little over 27%. Okay, that's better. Still, we need more inventory. Last week wasn't so great, but for the month, pretty good. And contracts signed up almost 15%, 582. That's great. Off market up 20, a little over 20%, 245. Brooklyn market is lagging a bit behind Manhattan, but also pretty good. If we take a look at the market pulse, we see that it is also kind of lingering in this somewhat neutral territory. It looks like it's favoring a little more this buyer's market. This, again, very much has to do with the supply and the demand. So it's an imperfect chart, but it basically tells the story. The liquidity pace, 582, the 30-day moving window contract activity. We see that it's going up slowly but surely. And for Brooklyn, that is a good thing. I'm going to share this same chart with you for Brooklyn that I did with Manhattan, this look at listing discounts and off-market listings that suggest the time to sell really starts to increase when the asking price in Brooklyn is about 4% above the median sales prices for similar units. So looks like Brooklyn is even less forgiving than Manhattan when it comes to, let's call it, being slightly too ambitious in one's asking price. Okay, that's it for Brooklyn. I'm going to move on now, give you my thoughts and my recommendations, so be sure to stick around for that. If you have any questions, please post those below or reach out to me at Sotheby's. In the luxury market, there were 25 contracts signed at $4 million and above. 5 of those were for the trophy properties. And overall, that is 15 fewer than the previous week. 14 condos, 4 co-ops, and 7 townhouses. 17 were uptown, 8 were downtown. If we look at the Manhattan and Brooklyn markets overall, we know that they are in this balanced and neutral state as they have been over these last weeks. The supply in Manhattan was up last week, 2.5%. We have about 6,392 properties on the market in Manhattan. Currently in Brooklyn, we saw just a little tiny rise in the inventory, about 1%. We have about 2,940 properties in Brooklyn currently. Contract activity, nice bump in both Manhattan and in Brooklyn. Manhattan up 24%, 278 contracts signed for last week. That's great. Brooklyn up 13%, 158 contracts signed for the week. So it's good to see this contract activity rising as we move towards the end of March and April around the corner. We definitely wanted to see that. Definitely great to see this rise in inventory in Manhattan. Would love to see more inventory come on the market in Brooklyn. So Brooklyn owners, if you're thinking about selling, this could be a great market for you, because definitely know that there are buyers who would like to be buying properties and they just don't have a lot of inventory to choose from. If we take a look at the current listing discount, we knew that the market was down about 10% when we came around the corner into 2024. It looks to be down somewhere around 6% right now, the current listing discount. So, things seem to be improving. As I mentioned, we hit the bottom, according to the data, about October, November of last year. And the data that's coming in is showing that the listing discounts are coming in at about 6%. So definitely seeing signs of improvement there. Okay, what does this mean to you if you are a buyer or a seller? If you are a seller, you can see that the supply is rising. So you do have more competition. That is something to be aware of. So depending on the kind of property that you have and how unique your property may be, you do want to be mindful of your competition. Do keep your asking price. You can see from the charts that I shared with you, if you're in Manhattan, within 5% of where the, let's call it, comparable sales that have happened, and in Brooklyn, between 3 and 4%. If you want to get your property sold in a timely fashion. And my final thought on the matter is on that very subject. Days on the market do matter. So, you really do need to ask yourself, is this the market for you? Do you want to be a seller in this market? Do you have options? If you have options, you may want to consider those. If you don't really have options, when I say you have options, what I mean is, are you okay holding this property for the next 5 to 7 years and to wait for this market to cycle around and for prices to potentially go back up? If not, then you need to take full advantage of the spring market. And that means April and May, maybe a little bit of June. It's going to get quiet in the summer. Then we have the fall market, but the fall market is a much shorter market. And that market usually involves listing in September when people come back. Most contracts get signed in October and a little bit of November. But we all know what is coming in November. This is an election year. We don't know what that will look like. And we don't know what other things will come along over the summer and the fall. My recommendation is, if you want to sell, then you need to do everything you can. If that means adjusting your price, then adjust your price and do it sooner rather than later. Do not wait around. Take advantage of this market. This is our best market of the year. And these are the best conditions that we've had since last spring. Okay, buyers, as I mentioned, the prices do seem to have stabilized. We kind of bottomed October, November. Your peak leverage seems to be behind you. However, you still have some leverage. As you can see, the current listing discount seems to be about 6%. If you're waiting for prices to just really tank, there's really no indicator to suggest that they're going to do that. I know that the interest rates are not going down as quickly as a lot of people would like them to, the mortgage interest rates. From my conversations with my mortgage experts, they are telling me that we should not be expecting to see big decreases in those rates. You have to ask yourself if you want to wait around for that. If you do, or you have to, then okay. But we're not very likely to see rates, at least this is what I'm being told, even, maybe getting into the low 5s, maybe. But the two takeaways here are, don't think the prices are just going to fall off a cliff and you should just wait around till they do, because the market is obviously going up a little bit, tiny little bit, from 10% across the board to maybe 6% now. Depending on your circumstance, maybe you want to wait around for the mortgage rates to adjust, maybe you don't. But if you see something you like and you can live with the rates as they are, maybe you want to take advantage now and not wait around, because you could be waiting a long time and you may miss out on that property that you love. You may also have more buy-side competition. You may have competing offers. You may see more people at open houses. You may find that you are having to pay more than you thought for a property. Again, prices are down anyway. You are still, frankly, getting a great deal. So don't feel bad. You're getting a great deal. And New York real estate is a great investment overall. And historically, it has proven to be a terrific investment. So, don't overthink it. If you love it, you can afford it, you're still getting a good deal. If you get a little bit off and you feel okay about the price, you're not stealing it maybe, but you're still getting a good deal. So, those are my thoughts. That's it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.